Hi, welcome to my blog. This is Amanda Morell, and I've got a guest with me today to discuss investment issues. And my guest is Josh Daniel, Head of Platform and Investor Growth for the Snowball Effect, which is a really interesting new startup company in New Zealand, which specializes in crowdfunding, equity crowdfunding to be specific. So if you're unfamiliar with this term or what it is, that this crowd, how it works, Josh is going to explain a few things to us. So to begin with, Josh, can you, in simple terms, explain what equity crowdfunding is?
Sure. Equity crowdfunding is very simply companies offering shares to the public. So this differs from rewards crowdfunding, where if you give money, you receive some type of product in return. Equity crowdfunding, you receive shares in return. So what this means is you own a stake within that company, and it means that you share in the upside if that company does well.
Cool. So at the moment, you've only just begun in August, is it, or July?
August.
So it's early days, but already you've got 3 companies that you're backing or supporting.
Yes. So there's been 3 companies that have made an offer on Snowball Effect. The first was a craft brewery, the second was a film, and the third is a clean tech business. So we've seen a range of different industries use equity crowdfunding so far. And they've raised so far a combined amount of 1.7 million from the New Zealand public.
Yeah, that's amazing. So how does it work for, if I was a potential investor out there and I saw that you've got these various companies, I think that's going to be a winner. What's next for me? How much? And what are the risks I would face?
Sure. So the offer information is on the offer page online. So you simply go and read through that information. If you have any questions, you have the ability to ask questions of that company through the webpage. You can also see questions that previous investors have asked, and you can see the responses to those questions. So obviously you need to be satisfied that this is something you want to push ahead with before investing, and you have the opportunity to ask those questions. If you are wanting to proceed and invest, you simply enter the amount that you'd like to invest and invest through the webpage. And every company will have a different minimum investment amount.
Yeah.
So far we've seen $500, then $100, then $1,000.
Okay.
So it is relatively small amounts, particularly for this kind of investment, which is early stage equities.
Right. And is there a maximum amount you can invest in a particular company?
If there is, it would be set by the company rather than by the regulation. Yeah. So unless the company has a limit on how much each individual can invest, then you can invest right up to the amount that they've offered.
Okay, so how many people have invested so far across the 3 companies that are on your boards?
So far we've seen around 600,
yep.
And of those 600, around 11 have invested in all 3 of those offers, yep. And around 44 have invested in 2 of those offers.
Okay, so what do you see the upside in this offer being for potential investors? Do you see it as an alternative way of investing or a way of really investing in Kiwi companies, or what's the advantage for people out there?
I think the key thing is that this is the first time that most people have had access to this asset class. Mm-hmm. So normally, if you're making an offer of shares to the public, you need a prospectus. Right. And the costs and time involved with that just put it outside the scope for small and medium-sized companies.
Right.
So they're restricted to offering shares to either friends and family or people that are deemed to be eligible investors, which essentially means that you're wealthy enough and deemed able to make these kind of investments. So this really is the first opportunity to access this asset class. Yeah. As an asset class, it was generally thought of as very high risk and very high reward.
Right.
So there is a high risk that this company will fail or will fail to meet its expectations. There also is a large potential reward.
Right.
Because you're coming on at an early stage in the company's history, and if they are successful, then there's a huge amount of upside there.
Right.
But it certainly is the risky end of investing,
right.
And so we certainly say that should only be money that you can afford to lose,
right.
And it will be illiquid too, so it is very hard to get those funds out if you need them quickly.
Yeah, and so you typically would not be going through a broker or a financial advisor. This is a DIY sort of investment. So what advice would you have for those potential investors to do their own research on these particular companies, or can they get that research through you?
So there'll be certainly the start of what they need in terms of their research on the offer page.
Yeah.
If they need more information, then they should certainly ask questions or do their own research beyond that. If they haven't invested in these kind of investments, early stage equities before, then certainly recommend talking to people that have and really getting an understanding of the characteristics of this type of investment. It is illiquid, it's hard to get your money out, it is high risk, and understanding that is crucial before putting your money in.
Right.
So I think the best thing is to read and watch a few of the offers come through, ask questions, talk to other people that are looking at the same investments or have made these kind of investments before, and get comfortable before putting any money in.
Yeah. So uniquely, we're ahead of the curve. Australia hasn't yet introduced this model, but it is working in other jurisdictions, including the UK and the US, as you mentioned before. How has it worked so far, in your opinion? It's still early days in those countries as well, but is it working?
Yeah, it's certainly early days, but certainly it is working so far. So in the UK, we've seen it, they've been operating for around, or a bit over 3 years, and it's taken until this year to really ramp up the volume that's coming through. We've seen much more deal flow come through in this calendar year than in all the time previously in the UK. And we hope to be able to shortcut some of that uptake because we do have overseas examples that we can point to, and companies can take, and investors can take confidence that this system is working. And we think there's no reason why we can't grow faster than what they have in the UK on a population basis.
And now, what protective mechanisms, if any, are there for the public year? Do you fall under the auspices of the Financial Markets Authority for sort of monitoring, or who's out there to make sure that investors aren't, at the mercy of some, shonky companies?
Sure. So we as a platform are licensed and regulated by the FMA. As part of that, we have certain requirements under the regulation. So, for example, we carry out anti-fraud checks on the directors and key people of the company. There are other measures that we take to protect investors as a platform aside from those required by the regulation in terms of the background checking we do. But the key protections really for investors are threefold. The first is securities law. So if the directors make false or misleading statements in their offer information, they're potentially personally liable. So there's a real disincentive to make false or misleading statements. Second is contractual law. So with every offer that goes through Snowball effect, there'll be a shareholder agreement as part of that offer that contains the usual terms that an investor would want when investing in these kind of securities. So preemptive rights, drag and tag rights, requirements about communicating with shareholders and so on are included in that shareholder agreement. So that's the contractual law. And the third part is company law. So every entity making offers through crowdfunding will be a company, and that provides a framework under which companies need to operate. And there are certain shareholder rights and director duties and so on that fall under normal company law.
Right. Okay. So this is a separate beast from the whole DIM system that we saw, where people with Ross Asset Management and were sort of not victimized, but taken by surprise by certain regulatory loopholes or black holes. This is a bit more well monitored, would you say?
It's mainly different in the sense that people are investing directly into companies that they like. So there's we don't act as a fund. We don't actively manage people's money. We are simply a marketplace for companies to offer shares to investors, and they can invest directly if they like. So we don't manage people's money, and that's what really sets us aside from a fund that may invest people's money into whatever they like.
And you, I imagine you've had a fair bit of interest from New Zealand companies, startups as well, wanting to get on board with this, because it's difficult for companies these days. That's their biggest, I think, obstacle to getting to market is the capital raising portion. Have you been besieged by interest or requests from public? And if so, how do you filter which companies you decide to going to launch on your platform or not?
Yeah, it's a really good question. So there has been fantastic interest so far. There's been over 500 companies express interest with Snowball effects. So a big part of what we do is filtering those companies that express interest, figuring out which ones are right for equity crowdfunding as a funding option, because some of them are better suited to angel investment, to debt funding, whatever it may be, and then understanding whether they're investment ready and whether we think they'll successfully raise capital from the New Zealand public. So we're trying to answer those questions. That takes a long time. Some of them are just obviously not suitable. Maybe they're too early stage. Maybe they just haven't got a well-rounded business that is ready to offer shares to the public. But once we think that they're in a position where they're almost ready to make an offer, we work with the companies to prepare their offer information, which includes obviously the disclosure materials, the legal documents, a video pitch, and a marketing plan to spread awareness of the offer, particularly to the audience. So a huge amount of our work is in vetting those company applications and in working with companies to get them onto the platform in a state that we think they'll be successful at.
Yeah, I think it's really exciting. And so for anybody who's interested in potentially investing for the companies that you do have already on board or learning more information, where's the best place for them to go? Your website?
Yeah, I think that's the best place to start. So there's information about the process for investors and companies.
Yeah.
We're actually about to start a bit of an education series that we're really excited about. And we're going to be pulling in our partners, so the likes of Wynne Williams, Deloitte, KPMG, with short video clips on various aspects of both, capital raising for companies and investing for investors. And we're really excited to put out that kind of information, and we want our website to be a place where people can come to learn about this whole world. And it is new to a lot of people. We're really keen to cater for that.
Who would you say is your sort of prime demographic for this type of investment? We're looking at people your age or my age or older or a mix. Can you pigeonhole it?
There's sort of 4 key investor demographics that we think will pick this up fastest. So the first is someone who's time poor but has disposable income, and a classic example would be a professional.
Yeah.
The second is someone who's come off the back of a successful career, has some wealth, but wants to stay involved in the SME sector in some way. And often these people have a bit of an altruistic bent to their desire to invest in this channel. Third is professional investors who, if we do a good job, will come here for deal flow, consistent and quality deal flow. And the fourth is actually really important, and that's the company's own audience. So what we find with crowdfunding generally, not just equity crowdfunding, is that a significant portion of funds come from those that are near and dear to the company. So they're customers or potential customers, they're users, they're friends and family, they're people within the industry, so we have some kind of proximity there. So that's a ragtag bunch of people, depending on what the company is. But yeah, those are the 4 categories that we think will pick it up fastest, and that's based on what we've seen overseas as well as our own market validation work here in New Zealand. And what we've seen so far from the first 3 offers is that has largely reflected who's been investing. So there's been, generally speaking, about 30% coming in from the company's own audience, and then a mixture across those other 3 categories.
Interesting. And are there any restrictions about if it has to be a New Zealand-based company, and do you have to be a New Zealander to invest in these companies?
It does have to be a New Zealand company. It is possible if it's a foreign company to structure things in a way that a New Zealand company raises the funds and then provides them by way of debt, for example, to an offshore entity. In terms of investors, it's open to the New Zealand public and eligible investors from other countries. So it's the same as an offer of shares in Mighty River Power that's open to the New Zealand public. It gets very difficult to offer wider than that because other countries' security law can often prevent offers being made into other countries. So essentially it's open to the New Zealand public, and if the company offering shares is willing to do so, also to certain international investors.
Interesting. Well, I'm very excited to see where this is going to go for you and for New Zealanders and New Zealand companies. So thank you very much for explaining to me how the process works, and hopefully we can have you back again when, I don't know, in a year's time and see where things are at.
I'd love to.
So I'm Amanda Morell, and this has been Josh Daniel. He is the head of platform and investor growth for the Snowball Effect. And again, the website where you can find more information is www.snowballeffect.co.nz.
Yes.
Cool. Thanks for joining us.